Good afternoon again. This is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, August 23rd, 2006. Markets just wrapped up. Let's take a look here at the Nasdaq 100 Trust, the QQQQ on the screen. I'm looking at a 10-minute time frame right now, and on here we've got about 10 days worth of data. We can see that these lower highs of the last few days did finally succumb to a little bit of profit taking as the market got down below that 5-day moving average and held below it. So we had a little bit of profit taking. Market came down just under $38 level, and if we take a look at the daily time frame, you can see that it's still a very healthy uptrend here that we have in the Nasdaq 100 for the short term, intermediate actually, and we've just got a slowly changing picture. We've got the 10-day moving average above the 50-day moving average. We get that 20-day moving average above there too. I think it's really going to take on a whole nother life, especially if it can take out this high right here. Then I think we're in for a test of that 200-day moving average up near 40. If you just take a quick look at the height of this move, which is 36.5 up to 39, and add that to, let's just say this is the low point, so 36.5 to 39 would be 2.5 points, and we would add that to 38. That would give us a price target of about 40.50, bringing the market right up to about this level here, which is also where that 200-day moving average is. Just something to keep in mind. Let's see. Let's wait for the evidence that the buyers can retake control. We had another low volume rally. This week's just going to be a low volume week, but it was just a normal controlled pullback, I thought. Didn't look like a lot of panic. What the market has to do short term for the buyers to retake control is to get back above 38.30 and hold there for at least a half hour to an hour or so. That's what will turn me less defensive here on the short term right now. But we're still in a healthy uptrend. Yesterday I was saying that if we took out the prior day's high, yesterday after the close, I said if we took out yesterday's high, I thought we would make a run real quick for 39.20. Obviously that didn't happen, and right now, if we take a look at how this pullback has occurred, we can just take a look to see, let's say if we take these lows to this high right here and use Fibonacci on here, for instance, and my machine's slowing down for some reason, you can see that just by taking the Fibonacci that the market came down to an almost exact 38.2% retracement of the move from these lows right here at $36.31 to $39 a share. So that's just something to keep in mind. It's not necessarily something that we're so much interested in. If we look at the 1-minute time frame, you can see on here that the market had a little bit of strength early on and then came back down below that daily VWAP. And I've been telling you and stressing that you've got to, keep your eye on that VWAP, because once the sellers take control, they usually can maintain that control for a while. And certainly, after the first half hour, they took that control of the market and kept control of the market throughout the day. So, a little bit of profit taking, nothing really to worry about, I don't think. The S&P 500, again, I would classify this as just a little short-term pullback, a little bit of profit taking. Market impressively allowed this prior level of resistance to temporarily at least act as support. So we've still got a very healthy uptrend, healthier uptrend in the S&P 500. No reason to change tune or get nervous in here. Although the short-term time frame on the 10-minute, you can see again here that we broke this support level. This support of the last couple of days did act as resistance. We've got that 5-day moving average flattening out. So the market's going to have to get back. The S&P 500 is going to have to get back above 129.80 again. Above 129.80, we can be a little bit less defensive and look for the market, for the buyers to regain control of the short-term trend of the market. We've got the 10-day moving average just below right in here. And actually, if we look at the Qs, we'll see that we've got the 10-day moving average just below current levels as well, right in here at about the 37.80 level. So the other market we've been looking at and keeping an eye on, and will continue to do so, is the Russell 2000, the IWM. And on the daily time frame, we've had our eye on this downward resistance line here And what I've been calling for the last couple of days was a pullback down towards $69 a share near this cluster of moving averages. And I continue to believe as long as this market can hold above and maintain holding above that 69 level on a closing basis, that we really don't have anything to worry about, that the market's building for what I think could be a breakout past this 71 level and continue higher, at least up towards these highs up in here. But let's just let the market tell us what to do. In the short term, again, we've got to be a little bit defensive here. We need the IWM, the Russell 2000 ETF, to get back up above the $70 level before we can really feel confident again. So let's go ahead and take a look at the stocks. We're stopped out of CBB. At a break even. The price there was $377. I'm going to hang up on that person right there so we don't get interrupted. CBB, we're out at break even. CELG, I had suggested that it looked like it was going to continue down towards about $41 a share, and that's about where you probably should have taken your profits. That's where it came down to today. That level was also, they're being persistent, the area here near this S2. So that's where you probably should have taken your profits in CELG. I'm going to discontinue updating this one, even though, again, we officially got stopped out. I'm aware of that, but I did continue to look at this as a short. Now, yesterday, I had said that you probably got stopped out of this one. In fact, you wouldn't have been stopped out at 45 because the low yesterday was 45.01. So the market, if you did hold on, hopefully you got out of this stock on this massive rally today if you were still in it. And again, I'm going to point out R2 as a place to do some selling on a quick rally. So on this form factor, you should have gotten out of half of it at least if you were still in at 42. At 47.5 near this daily R2. Put the rest of your stock at a stop at a break even. ANDE we were looking at as well. I'm going quick because I want to keep this under 10 minutes to get it to YouTube. Google's having problems. ANDE gapped higher. We were looking for a pullback, so there's no play in there. BLDP, Ballard Power. We had our move past 630, and then we got stopped out as the stock dropped down through our stop. Should have lost about 20 cents in there. OmniVision, symbol OVTI, looking to buy that at 1828, above 1828, and stop at 1786. Again, I'm going to tell you, keep an eye on daily R2. This is a place to sell at least part of your position. And then you should have been stopped out below VWAP in there. So I'm going to say we're no longer in OmniVision. It made a nice quick play, and hopefully you got out of it in time. Two stocks that we were looking at on the short side, I got to say, I can hope I don't dislocate my shoulder here, pat myself on the back, but I was calling for a rally up to 95.20. We had a high of 95.25 in here today, and then I wanted to see you sell the stock short on a breakdown below there. The stock should have been sold short at about 94.90 today. Our target was 92 to 92.5. This is where S2 was as well, so you should have closed that out with a very healthy profit in there, about $2.50 or so for ISRG. If you're holding it longer term for a bigger breakdown, I think you've got perhaps a little bit of support in here, but I do still continue to believe we can see a collapse in this stock coming. And lastly, New York Stock Exchange, symbol NYX. What I had suggested in here was a short sale below $57.30. We had that opportunity to sell the stock short below $57.30 right in here. Is where it got below it. I had suggested a stop then should go at 58.05 as a maximum. That should not have been stopped out. You should still be in this as a short position. I think your stop goes above this level, which is 56.86. So let's just say 56.90 is where your stop would go. Although, you know, another 50 cents lower or so, I would say take part of your profits. And you probably should have taken part of your profits right here at daily S2 anyways. My name again is Brian Shannon. Do check back again for another video this evening. I'll get that uploaded about 8 or 9 p.m. Eastern. Thanks for your time, and talk to you later. Bye-bye.